All right, everybody, welcome to Tesla Today. So we've been seeing the stock rise quite significantly. It's 11 days straight. We'll see what happens today. But what we want to think about, and learn more is what do we think is going to happen to the stock this week and this month? This week, there's a lot of movement from the Fed. We're going to have the consumer price index on Tuesday. We're going to have a Fed statement on Wednesday. So we've got Jeff Lutz joining us. Jeff is quite the person to ask about movement. He follows the economy closely in the macro. He can give us his advice. And we're going to also explore all the different kind of things that could make the stock go up or could stop its momentum. So welcome, Jeff. Thank you. Every Monday, you're with me. Appreciate you.
Hi, Herbert. How you doing?
Good, thanks. Okay, let's get started. So the first thing we want to hear about is what do you expect to happen this week? So our friend Xander Sky sent this out. This is a typical tweet that you do. If folks, you should be following Jeff at the Jeff Lutz on Twitter. He often will give you updates on the economy. So this is the kind of stuff you normally tweet out. And he said that Tesla is going to open up with 1.69% in the pre-market. That's this morning. And then Tuesday, the consumer price index coming out. Wednesday, the PPI, the FOMC statement. Thursday, the core retail sales, unemployment. And Friday, calls it the quadruple witching, which is, I guess, the Friday where all of the options expire and all that's happening. So tell me what you think all this means and what we should expect.
Yeah, it's a good summary from Xander, and please follow Xander as well. Um, it, there's a lot. There's a lot happening this week. This may be actually it's being touted as could be one of the more important weeks of the entire year. I know we say this almost about every week of the year, but from a trading perspective, this may be one of the more important weeks of the year. We're at a point in time where there's a belief that the Fed as a high probability of pausing. I believe it's somewhere between 75 and 80% in the Fed funds futures, pointing to a 0% hike, and so no hike in June, and then maybe one in July. But it's really getting down to the kind of the final throws here in terms of raising rates. And there's a couple of charts I think we'll get into in a bit that kind of talk through why that may be the case.
Wow. What a statement there, Jeff. So this is a critical week. I love it. So, I mean, obviously it can go either way. If they pause, does that, I mean, like, are we in a bull market now? And is this not going to be very beneficial for Tesla for the next 6 months if they pause? Or they could obviously still put a damper to it, or are we off to the races already?
I mean, it depends. This is the big talk right now in fintech: has the bull market started or not? There's quantifiable data points that say we're X% above the low. That would say we are.
Mhm.
But there's also data points. If you look back at history, there's been multiple runs like this, like in 2008, and then the market took a broader downturn. There's also historical data points that say it's a certain number of months after the Fed stops hiking to
Mhm.
actually ultimately reach a low.
Yep.
There's also data points tied to a recession. I actually think we had a recession. We had 2 quarters
Mhm.
consecutive negative GDPs last year. But I actually think
Mhm.
every period of time, this is my take, is different. We didn't have sub 4%
Mhm.
unemployment at these other periods of time. And we didn't have the kind of economic activity, GDP and economic activity that we had in those times either. So, and that recession in '08 was a very deep recession. There's a banking crisis, there's a real estate crisis. So I'm not saying, by the way, none of this show is trading advice from either of us, obviously. Uh, I don't know if it's you can flash and all clear, but I've certainly
Mhm.
not been on the sidelines this year from a trading perspective and an investing perspective. And I believe fintech is. I mean, you just watch TV. They've had it wrong, really, the entire year so
Mhm.
far. And really, it's almost like there's just when you see this crowd of people, actually, everybody saying the same thing. That's when you can kind of start thinking counterintuitively, like, should I go
Mhm.
counter trend? It's just one thing to think about. Now, if you watch TV, you don't hear every single person speaking about a recession. So I don't know if you can say it's an all clear if they pause. I think it's going to be a reluctant pause. I think this is the first time the Fed is actually going to be on the record as being split. They actually came out before the blackout period the week before last, and the vice chair came out and said that he's in favor of a pause and kind of look around in June, just given the velocity of the rate hikes over the past year.
Okay. Well, it's the big week. So let's repeat what's going to happen on Tuesday, the CPI data, Wednesday, the PPI and FOMC statement. Thursday is the core retail sales and unemployment. And Friday is the quadruple witching. Do you want to explain each one of these?
Yeah, and there's a table that goes into a little bit more detail of what the expectations are.
Hmm.
It's a little bit of an eye chart, but there's a table in here that goes through it. But yeah, the CPI data is the consumer price index data. So that's what consumers are experiencing. And it's a makeup of obviously all the housing data, auto data, and consumer purchase trends, prices at grocery stores, and so forth. It's a measure of inflation, and it's referenced. The headline number is referenced off the last year of data, and then the PPI is the actual leading indicator to CPI, I believe, which is the producer price index, which is what are the input price, what's happening to input prices, commodities, and so forth. And both have been actually, it was, I would say the CPI was kind of a flattish. The last reading is a little bit flattish, but it's been in a downtrend for the last 6 or more months, and the PPI has definitely been in a downtrend, cooling. The thing you have to worry about with the PPI is the PPI coming down because there's concerns of a slowdown. There's less things being purchased and put into inventory for production. So you kind of have to watch. There's kind of a double edged sword on both of these. And the PPI one, this one you have to be careful. And we'll have some charts that kind of talk to the rate of reduction. And I think this is where the Fed has to be careful. And then the FOMC statement. So Tuesday, all the Fed governors get together with the Fed chair and the vice chair, and they meet. They discuss the economy. They go through various data points from their region. So it's Fed governors from every kind of major region in the U.S. And they go through their data. And then Wednesday, they kind of come to a conclusion on a decision in terms of what they're doing at that meeting, in terms of rate hike, no rate hike, and what size. And then Wednesday afternoon, Chairman Powell will number one, Wednesday afternoon at 1 Central, they'll release it, and I think at 2, or sorry, 1:30, he'll have a press conference. So that's kind of what's going to happen um, through this week.
Okay. And then Friday's quadruple witching, which I know what
Yeah.
it is, but a lot of people didn't. And it took me a long time to learn what it is, but it's about the options and they all kind of expire on a Friday. Tell us what does that mean for investors?
Yeah, and in the last couple of triple and quadruple witchings, there's basically been in the area of $1.5 to $2 trillion of options expiry. So you could see a lot of trading activity at various points in that day, and then definitely in the last like 15 minutes when people are kind of forced to settle as these options time out. So it's just kind of a, when options are being bought and sold, in prior weeks and months in advance, this week was and that Friday was pointing where a lot of options are expiring. So that'll be, you could have some volatility on that day. I think you could have some volatility on the FOMC day. We normally do, which would be Wednesday. And then Tuesday, the CPI reading is actually released from the Bureau of Labor in the morning time. So you'll have Tuesday morning, the government will release the CPI data. Tuesday, the Fed meets internally. Wednesday, the Fed meets internally. The PPI data will be released that morning. So the Fed will have kind of hot off the press CPI and PPI, and then they'll render their ruling in terms of what they're doing later that afternoon, and then quadruple witching. And then there's some other data points that are very important. Jobless claims comes in weekly. That should be on a Thursday, I believe. And then you have a bunch of manufacturing indexes from New York, Philadelphia, industrial production. inventory, and then this University of Michigan consumer sentiment and their inflation expectations. Those can nudge markets a bit. They haven't done it so much the last 1 or 2 months, but when the market was super, super inflation sensitive, call it 3, 4, 6 months ago, it was definitely moving markets. So there's a lot of there's a lot of data. This table's a really good table. Liz Ann Saunders publishes this from Schwab, and it shows the release date, the estimate, like what's the consensus on it, and then what was the prior reading. So it'll be interesting to see it. My take is on the CPI. If there's a number that prints with a 3 in front of it on CPI, I think the market is off to the races. It would be bizarre for the Fed to also raise if the CPI comes in with a
Mhm.
3 and a 3 handle in front of it. So that tomorrow morning reading is going to be a very important reading. If it comes in hot, if it comes in 4.3 or 4.4 or something like that, then you could expect the Fed to move. Um, and they'll have a little bit more of a license to move. So we'll see. We'll see. I think that Tuesday morning data point's probably the most pivotal right now.
Nice. Thank you, Jeff. This is why I love, this is the value that you provide for me. Thank you for teaching me things that I don't know about, and I don't follow this, but thank you for following it on my behalf and warning me ahead of time. So you've shown this is something you tweeted out too, or you
Yeah,
retweeted this.
yeah,
Yeah, tell
yeah,
us what you're saying here.
yeah. Just really quickly on PPI and CPI. There's a U.S. PPI metric. There's a China one. Again, sometimes people don't believe the China numbers when they're super high, but if they're super low, you have to think like what's going on. But basically, these charts are showing there's just been a rapid decline, and and they're actually falling at a pace that's faster than they went up. So this is where the Fed has to be careful. And if these numbers fall too fast, if and you have this deflationary environment, it's where the Fed has to be careful, because impact jobs, it can impact a number of different things. You certainly won't have price stability, if these things fall too quickly. The Fed does not want 0% inflation. They want it
Hmm.
at 2%.
2%. Hmm.
And so you have to be careful. Again, they raised interest rates at a faster pace than has happened in 40 years. And the big warning, and this is where the Fed is starting to split, is like, hey, we're not sure of the impacts. So it takes 12 to 18 months to really see the impacts of all these rate hikes. So now you see it coming down this quickly. This is where there's some concern. There's also a metric called trueflation, which some people toss out the window, but it uses more real-time information. And there's even noted economists, very prominent economists and professors that look at even just the the federal government core CPI, and they take out how they look at owner's equivalent rent, which is very lagging, multiple months in arrears, and they swap it with the Case-Shiller index, which is more real time and a very prominent metric for housing, or they swap it with Zillow data or Redfin data. And when they do that and they leave everything else the same in core CPI is below 3. So this is where we have to be careful. You don't want persistent inflation, and this is why the Fed has been doing what they've been doing. At the same time, um, we want to be careful not to over tighten and literally break many things.
Yeah.
So the things that people are concerned about right now are corporate real estate is one, and then just the health of the banking sector.
Right. Okay. So we known, all of us painfully have learned, even if we didn't know ahead of time, macro economy is the number one, driver of stocks in general, but Tesla specifically, because Tesla is a beta stock. It's very volatile and this growth, it's really priced in because of growth. But anything that reduces the growth, of which macro could do, it hit it hard. So we've suffered for last year, but it looks like, hopefully, cross fingers, like you said, we're not saying anything at this point, but it's looking like inflation is being tamed, as you can see for those numbers. And actually, it was good news last week where we saw unemployment go up, less
Couple
jobs. I
tenths,
mean,
yeah.
yeah. which is weird, but like you're saying, just hope that they didn't overshoot because they're so weird looking and they might have already done it. So if they are bold enough to try to increase it again and not do a pause, then that could be pretty scary. We'll see what happens. But it could also be they've seen the numbers and it's looking good. We'll see what happens. Okay. So let's talk Tesla stock. So we've seen incredible growth in the last 11 days. And I wanted to kind of get your feedback. I'm going to share what Gary Black is thinking about the stock. Let's go through what he says and then let's hear your reaction to it. So, his opinions, he's got a multi thread tweet here. First, he says, okay, we've had 11 consecutive days of gains for Tesla. It's risen in those 11 days 34%, while the NASDAQ has risen 6%. So, clearly, it's a variety of catalysts is helping it go, or it's just maybe catch up mode. But he's saying, okay, now it's at 51 times the earnings per share for 2024 of what the Wall Street estimates are. So the Wall Street's estimates for 2024 earnings is $4.80, and the price is 51 times those earnings. For him, his 2024 earnings is 540, so it's only 45 times that. He says it's still quite compelling because his 5-year earnings per share is, based on the 37% growth, that's only a 1.2 times PEG ratio, which means that it's actually pretty still right on line with being a good investment. So that's what he's thinking. What's your reaction or thoughts about this?
Yeah, I have a number of reactions. One is, I think that, it's going to continue here in the near term. It's definitely, when you look at the technical indicators, so you look at the technicals and you look at fundamentals, and you look at the technicals. Tesla really started trading strongly when it closed over the 50-day, which was 178, and then it closed over the 200-day, which declined all the way down to $200 a share. And that was the first time it's traded over the 200-day. It did this in late May, I believe. It's the first time it traded over the 200-day since September, and that is a relative strength index, or a way to measure the relative strength of the stock is where is it to its 50-day moving average and its 200-day moving average. And if it can consecutively close above that, there's some strength technically. And there was some resistance then at the old 2023 high. I think it was around 217. It bursted through that. And then there was a resistance band, I think at 224 to 230. It went through that. So now, I mean, the Friday action was interesting. Again, this is not trading advice or investment advice. The action was interesting because it kind of ramped up and then it closed. It did not close on, near its high. And, so maybe it did get a bit tired technically on Friday. We'll have to see. It's doing okay today, but I wouldn't be surprised to see it, pull back a little at some point. It's hard to predict the stock on a daily basis. That's what I want to tell people, but you could have a small pullback. But the fundamentals, I think, is what's important. And the fundamentals are starting to really align for Tesla. I think the first half of this year, the story of the first half of this year is resetting pricing to deal with kind of the consumer environment, what's happened with all these rate increases. I mean, if you go in to buy a car today, your interest rates are going to be double what you would have paid last year. And that has an impact on people's monthly payments. And the thing I think some of us got wrong, including me, was to really give the IRA a lot of credit for offsetting that. I don't believe it's actually doing that. First off, the first month of the year, nobody knew what the IRA actually was, and was it even going to work, and which models. It didn't actually get clarified until March, and then again in April,
Mm-hmm.
in terms
Mm-hmm.
of Tesla and all the models being covered by the IRA. And the thing with the IRA is that when you qualify for the IRA, there's certain income requirements, and many of those people, or many people that that are buying a car, they're sensitive to their monthly payment. So if you're sensitive to your monthly payment, but that IRA doesn't come until you file your taxes a year from now,
Mm-hmm.
then you're just not going to feel the impact of that. So I think the IRA was. I think first off, I think the IRA is a great thing. I think as we get into the second half of this year, and now if you go buy the car and you use the IRA, now you're only a couple months away from filing your taxes and getting your return. I think the closer we get to the end of the year, the
Yeah.
greater that impact will be, and then it moves to a point of sale reduction. By the way,
January.
in many of the state, yeah, in January, and many of the state rebates, like in Illinois, for example, within 90
Point of sale.
days, if you buy in a car, they'll send you a check
Yeah.
for $4,000 when that's live. So anyway, I think the right now that isn't live right now, but it'll probably restart again. But I think those things, I think the first half was really around the pricing moves and getting the pricing right on the product. We'll see the trough in in gross margins, and but I think the markets are looking past that. I think the markets
Yeah.
are looking to the volume growth, that we'll see the relative volume growth again in a difficult consumer environment. The relative volume growth, then Cybertruck coming, Highland coming in the interim, which I don't think a lot of analysts have priced anything
Yeah.
in. And if you look at the Wall Street analysts for Cybertruck and what they're estimating, it's a pretty low number. It's about half the capacity that Tesla's installing is what they have in their estimates. And there's, upwards of 1.8 million of these reserves. So I think 2024, we're going to start. I think what's going to happen is this earnings announcement isn't going to be this on pins and needles. Like, is it
Mhm.
16.2% gross margin or is it 16.9? Like, it's not going to be about that. It's going to be actually about more looking ahead. And we're going to really start flipping to the 2024 calendar. And that's
Yeah.
where I think the focus is going to move on the price action of the stock.
Okay. So I've got a question, something that differs between an investor like me, who's a long-term investor, versus something like a Gary Black, financial analyst. And he just talked about the 50 PE ratio. And he talks about how it's based on earnings. It's coming up next year. I don't put as much emphasis on the earnings, the PE ratio against the earnings, because Tesla to me is a growth stock. It's a story stock. So, I'm clearly investing in a company that I think has to have this story and has to have this fundamentals. Fundamentals translate into earnings. Earnings definitely moves the stock, but the stock can move just based on what might be happening ahead of what you can actually measure, like a calculator, like these guys do. So let me share this story, and I want to hear your opinion, because I really am confused about this. But this is the PE ratio for Tesla, and it's every week. There's a thing here, measured from 2019 to 2023. So we're now at 50. The PE ratio is right now at 50, price per earnings ratio. But look how high it had gone to. Of course, it was overshot. Clearly, it was, but out there. But when people say, well, the PE ratio is 50 is fair, that's actually fair right now. Because if you look at the earnings in 2024 and you multiply by 50, that's the price we have right now. That's fair. And I'm like, why? Yes, it's fair as a baseline, but it's not fair when you don't count in the possibilities of these other things. Now, so for people who want to just value a company based on actual dollars coming in, yeah, it's fair. But if you want to get ahead of the game, you want to, that's why this is a growth stock, story stock. What's your opinion on what I just said there, on how I differ from my thinking?
Yeah, and this is why Gary, it's a great question, Herbert. This is why Gary rightly calls out the PEG ratio. The PEG ratio is basically using the PE and dividing it into the expected earnings growth. And this is where you have to understand the fundamentals of the company and where you think it's going to grow and how much you think it's going to grow, and you got to get this stuff right. And this is where the modeling becomes important. But as the PEG ratio gets closer to 1, for Google and Meta, I think we're closer to 1.2, Tesla's at 1.2. That, when you're a growth stock, I think the more accurate metric is to look at the PEG ratio versus just looking at a stagnant PE.
Yes.
PE for
Yep.
companies that have single digit growth or flat growth or slightly negative, you can use the PE as more of an indicator. So I think the devil's in the detail with this one.
Yeah, I mean, and the PE ratio is often it's often uh not it's for rear looking instead of forward looking, right? Trailing 12 months. And it just that
Well, there's
bothers me.
yeah, well, there's
Or
forward PEs, and there's trailing
yeah,
12-month
you should be looking at
PEs.
the forward Ps, man. Come on.
Right,
It doesn't
right.
even take into account the scaling of the two factories at this point if you're looking at those numbers. Okay. So this next thing here, he says, this is Gary saying that for Tesla stock to move higher from here, the earnings revisions for 2024, they have to turn positive, these earnings revisions. So two new data points this week. Management said that Cybertruck production is going to be 375,000 per year instead of what Wall Street thinks, and they've only estimated 160. This is what you said, but basically, they're more than double what Wall Street is estimating. So people will need to revise, the analysts will need to revise their earnings to accommodate that. And the second thing is the Tesla partnership with Ford and GM on superchargers. That alone is estimated to be about $3 billion in a couple of years from now. So Wall Street needs to change their earnings estimates higher as well for just those two things. And then you will see Wall Street increasing their price targets over this next 2 weeks. It's
Yeah,
hilarious. As we know, Wall Street's price targets are like so lower than the stock price, and so they can't look like idiots. And so now they're going to raise it just because of the friggin' stock price. So good job, guys.
yeah, and that's where this game becomes a problem. They tend to overshoot when they're bringing estimates down, and they tend to undershoot on the way up, and or sometimes they overshoot. So basically, they're overshooting in either direction, and that's where you can run into issues. Um, but the Cybertruck is very interesting. That Wall Street estimate is from 2025. So if they're starting production, you're starting factory production in August of this year. I would have to think that they would be at their peak velocity, in a year, definitely within 18 months. So, and I believe the 375, I believe that number. I believe that that could be a number that may have leaked out.
Hmm.
I believe that Tesla will
Sorry,
actually
it didn't leak
be.
out. Elon said it.
Oh, he said 250 to 500 in the
I think. Yeah. So the 375
yeah,
came in a.
it
It
was
was.
an
It was
electric
a.
article.
Yeah, but it wasn't leaked. Okay, I'm sorry.
Yeah,
That's a
yeah,
moot point. Moot
yeah,
point.
yeah. No, it's
But
a good point. It was an estimate in an article, and Elon is on the record saying somewhere in 250 to 500K range at the shareholders meeting in May. So I believe they're going for a larger number. I believe if I were inside a Tesla, I would tell the media a lower number, and I
yeah.
would want to go overachieve. By the way, if I go tell my suppliers 300K in my contracts, they have to keep somewhere in the order of 20 to 25%
Hmm.
additional capacity. So that number inside of lead time. So anyway, I like to think that Tesla is hopefully in this case under promising, which I think they're starting to do on hardware now. They're under promising and they'll overachieve on Cybertruck. I think that's going to move the needle a lot. I think Cybertruck is going to be a gross margin powerhouse, not only for the core offering, but for the accessories marketplace that Tesla is going to create and then probably license and proliferate and grow.
Yeah. Let's keep going. I love everything you're saying today, Jeff. Thank you very much. You're educating me left, right, and center. So this last sentence he put in this particular tweet, he said, um, in front of what likely will be a record second quarter volume quarter. So he's expecting 447,000 of deliveries, which is 75% year over year, fueled by the Chinese volumes and the $7,500 US credit on the M3NY, followed by the Cybertruck deliveries launch in Q4. So he's thinking that second quarter is going to be a record. We know that it's going to be. He's at Wall Street's at 447. It could even be much higher than that. It could be around that area. So we'll see what happens. But
Yeah, I think
then
we're
next,
entering this period, Herbert, where this ability to count what Tesla is doing is going to become increasingly more difficult. And I think you're going to start seeing wider, and may not be this quarter, but
yeah,
very soon you're going to start seeing much wider variation on these estimates.
yeah, multiple factories, multiple continents,
Hmm.
multiple products lines. It's going to be harder for anybody to even be nearly accurate. Uh, so Gary also says the fourth quarter Cybertruck deliveries. He says fourth quarter now instead of third quarter. But no, I don't know why. Any reason to push it to fourth quarter? The launch is reminiscent of the Model Y launch. So he's saying that, hey, if you remember what happened in Model Y launch in 2020, The bears and the analysts were kind of like not really paying attention to it. But if you watch what happened, the MY was not just a bigger M3 and would significantly expand Tesla TAM as it entered the rapidly growing CUV segment. The same is going to be true with Cybertruck in 2024. People are still going to think, oh, it's going to be a pickup segment when in fact it might be much, much wider than that. So it could surprise.
Yeah, I mean, I've never owned a pickup truck before, and I'm going to buy a Cybertruck. So I think Cybertruck is going to, it's not going to convert all existing pickup truck owners to go buy Cybertrucks, and that's the thing that I think that's out there of like, well, no, people are still going to want a traditional truck, and that's fine. There's people with different opinions. I believe it's going to bring a lot of people off the sidelines that have never owned a pickup truck before. They're going to buy.
Yep.
They're going to buy this.
Yeah,
So
me
it's
too.
going to
I
have
mean,
full self driving. Yeah.
I've got one. It's like you have to ask yourself, why did you get one? I have this wonderful tweet slide that I've been showing quite regularly. I need to pull it out somewhere because it's so good. But it looks at how people evaluate different car segments, and there's like 8 different things to look at: like performance, efficiency, cost, luxury, technology, those kind of things. And then economy cars, people buy that, they're going to forego performance, but they want efficiency and they want cost, but the Cybertruck actually hits all of them as being the best. And so the point being that the Cybertruck isn't just a truck, which is very much for utility, for efficiency and so forth, but you're not going to have it drive really fast, right? It's not going to be luxurious. Cybertruck is going to cross multiple segments. People might just buy the Cybertruck because it's better than whatever segment you were thinking of buying.
And you have a lot of expertise in this space.
In products, I mean, I'm a product manager, so I do look at those kind of things. Yeah. Okay. So the other thing that Gary was saying, that the reason why he thinks that the Cybertruck could actually be an accelerator to Tesla is because if you look at 2020, what happened when the Model Y came out, it drove electric vehicle buyers to stores, the website. When it came out, it just accelerates people looking into Tesla some more. And the same thing could happen with Cybertruck. When it comes out, there's an interest in the entire Tesla product lineup. Somebody might be going, oh my God, that's a Cybertruck. They're already producing it. Check into Tesla, find out that the Model 3 is actually with a 7,500 rebate. And then, like you said, in 2024, as of January, I don't know if many people know this. You've been repeating this. In January of 2024, the IRA is no longer going to be a tax rebate. It's going to be straight off the line, right off the path. As soon as you decide to buy the car, you don't have to pay. It's like 7,500 less right then and there on MSRP. Yeah. Okay.
Yeah, it's a big deal.
One of the things we know that was a big mover for the stock was these partnerships. Last year, it was the Hertz partnership that happened in December, and that just skyrocketed the stock. I remember clearly what happened. The stock was around 500, 600, and it just went up to $1,000, right? It was the big mover at that point. Well, we're starting to see the same thing with the partnership between Ford and the next GM, clearly showing that the competition's struggling. They need to partner, and it shows that Tesla's strength. But obviously, as we knew, as soon as GM came on board and so did Ford, everyone is going to fall in line now. The NACS, North American Connectivities, North American
Charging standard.
Standard is now going to be the standard. And so, as we knew, everybody had to just start making announcements. So this is ABB, Blink, ChargePoint, EVgo. All these guys here decided that they made announcements.
It's all new.
What's
yeah,
missing?
all new announcements. Yeah.
All new announcements. What's missing is Electrify America. They're going to have to make that announcement soon. I don't know what they're going to say, but they're but Blink and EVgo and ChargePoint, those are ones I know of. I mean, I've recognized them. And then this morning, Ken Power also made that announcement. It's going to be the NACS is going to be an option for their charging option. They're a creator. They're the ones who kind of build many of these charging stations. And then Blink, as we said, they're going to launch it too as well. So it's fast and furious. They all will need to fall in line. We're not only going to see these charging stations, but we're going to see the rest of the OEMs. We're going to need to do it, a few more at least. But so I made this tweet out, and I wanted to have a conversation about you. I'm predicting that there's going to be a tsunami of partnerships with Tesla that's going to start. And I don't know if you remember, but a couple of months ago, I was pretty adamant that there's going to be a partnership with an OEM this year, and it happened. Right? Ford actually said that there's a supercharger partnership, but I think that this is the beginning. So now that you've seen superchargers, we're going to see the rest of legacy auto for superchargers. This automatic emergency braking is a new uh, proposal by the NHTSA, saying that they're now going to make this a law that all cars must come with automatic emergency braking and other ADAS. And apparently, not everybody has this. And it's not just standard automatic emergency braking. There's actually like even like it needs to recognize humans. There's very specific requirements for this. So even though you'll say, "Oh, Mercedes already has this," well, they may not have exactly what is going to be in the law. And I think that when that happens, Tesla's going to step up and say, I've got it, license it for me. As we know, full self driving, almost guaranteed that other car companies will be partnering with them. It's just a matter of time. And I think it's going to happen sooner than we all think. I think that there's going to be a partnership with hotels, retail, and restaurants for superchargers. As we know, now the the superchargers is now the standard for the US. I tell you, if I was McDonald's, if I was Whole Foods or something like that, I would make an announcement. Every one of my stores is now going to have Tesla superchargers in them, and it just solidifies it in people's brains, in minds, in their mind share that if I need a supercharger, oh, I know, I'll go to the locust Whole Foods. I know they have one. So those partnerships are going to come. They're going to come. Partnerships for Tesla Entertainment and other software and apps. Obviously, there's still the potential for them to partner for the body casting, the skateboard. Maybe less likely because Tesla needs all of them that they can make. But if the factory is the product, if Tesla says the factory is the product, then they should be willing, and they should, like, if an OEM paid them the money to build a factory on their behalf, why wouldn't they? And with the new modular uh, uh, unbox process, that's one of the reasons they're doing that, because it makes it easier for other brands to put in their insignia and their kind of body shape on top of it. Partnerships for mining. You heard Ford CEO saying on the space, you know, what about congratulations on your mining and lithium mining refinery, right? I'm telling you that he's angling. That's what they need. They need to make these partnerships, and Tesla's now doing refining of minerals, and Dojo's a supercomputer. I mean, there's so many things. So, yeah. What do you think, Jeff?
Yeah, I think what you've seen happen, it was a good call too, Herbert. Tesla has now opened a procurement relationship. This is official that there will be transaction activity between Tesla and Ford, Tesla and GM. It was never on, the books prior to this. And that's a big deal because that could lead to many of the other things in your list. While I don't think Tesla is going to become a contract manufacturer for mechanical parts for other companies, because there's reasons for that. I do believe that there could be an opportunity on the motor inverter side and potentially on the battery technology, as Tesla will most likely again leapfrog and be number one in that in terms of energy output required per kilowatt hour. And so I could see some partnerships there. The FSD obviously makes a lot of sense. And all of this goes back to, I think, one fundamental thing, which is when Tesla goes after an area in their product or an area that they're working on, they go after it for scale. Their approach to FSD was to purposefully scale FSD. If you went and you tried to go buy the Mercedes-Benz solution, that's a very high dollar, high cost solution, and it's quote unquote level 3, but it's you have to be under 40 miles an hour and you have to be driving during the daytime. Like, these things don't come out in the headlines of articles, but then when you read, the bylines or just the article itself, you'll read like how unscalable these current solutions are today. How unscalable are some of the current battery solutions that are being built today as well. So there's a core area. I think they started a procurement relationship with these companies. They've started a partnership, and these companies didn't want to come to their competitor to go buy their services and, pay them some margin for that. That wasn't their intent when they got into EVs, Ford and GM. Their intent
Yeah.
was to be the leader, the quote unquote, and be successful. So you're starting to see some capitulation. You're seeing a procurement relationship open up. You're seeing Elon be very magnanimous about it, which is the right approach. And and again, everything that Tesla builds, they build for scale. So who are you going to go to for licensing? You're going to go to the company that builds a solution that has the best performance, the lowest cost, and that is built for scale. And that's what Tesla does. So I do see them being a source really to ultimately to drive the conversion of EV beyond their own cars, to drive the conversion of EV in the industry.
Yeah. Okay. So we've been waiting for quite a long time for these partnerships to happen. We've been saying that it's going to happen in the future. Some people say, well, this is just superchargers. That's it. We're not going to expect anything. Now, when you said that they've opened a procurement relationship, how big of a deal is that? I mean, is that a minor thing? I mean, but Ford did say they spent 8 months or longer to negotiate this. I mean, and then you heard Elon twice on the space bringing up to Ford, Jim saying, "Hey, we've got software. We'd love to share that with you." Why would he say that on his space? Obviously, they've already discussed it. Like I'm just am I reading way too much into that?
Yeah, no, here's why the procurement relationship is important, and I'll condense this so it's not wonky and boring. When you engage with a company, the first thing you've got to agree to as companies, and really it's the company that's procuring, the item from. So Tesla's got a master services agreement with their suppliers and their partners to do business with
Mm,
Tesla. Like, here are the rules of the road to do business with Tesla. Ford and Tesla, I mean, they had to have signed some sort of master services agreement. This is how we deal with claims. These are the caps on indemnification. This is how we deal with, X, Y, and Z. So there's got to be kind of a master overall agreement that I would hope that they've signed together. And then there would be a specific procurement contract for the supercharging. And this is how it's going to work. Here's how dollars are going to change hands. Here's our account information. Here's how money's going to flow between us. So that's why this is important. So if there's another agreement that has to happen, they can already refer to the already signed master services agreement and say, all right, we already signed the master. We've already done a specific contract. We already have a module going for charging. Let's start the module for FSD. Get the same negotiators in a room with plus or minus a few people. And they're like, oh, yeah, we just worked on this last year together. So I think that's why having a quote unquote procurement relationship started is important. Um, and yeah, I don't think this is the end. I think it's the beginning. Again, Tesla builds solutions for scale. And as I think I think it would be in companies' benefits to jump on the FSD sooner than later, not wait for
yeah.
Tesla actually to get to the final endpoint. But I do think they're going to wait until Tesla gets to a stage where it's released wide, it's not a beta anymore. Maybe it's not a robo taxi service, but
Mhm.
there's something in between. We're already seeing that there's 25% adoption where FSD beta is released. 1 in 4 people that have the capability in the car have bought it. They've either bought the monthly subscription or they bought the full upfront cost. So that should have only been growing as version 11 comes out. So I think you'll see it in full self-driving. I think you may see it in motors and inverters, because if you can get a better performing powertrain, you need less batteries. And what's driving the cost of EVs? What's driving the mass in EVs, and therefore the battery size is the powertrain performance.
Yeah. In
So
addition to
there's a number
the
of areas.
master service agreement, yeah, in addition to the master service agreement that they've already negotiated, what's a bigger deal, could be as equally big deal, is the fact that their software teams are now going to work together to create APIs to feed
Right.
into the Ford app. And now you got the two teams working together. Now it's easy to say, hey, do you want, do you want premium connectivity? We already do that. Do you want some entertainment? Do you want us to power your screen?
Right.
There's a million things that they can just slowly add or go big with the FSD, advanced ADAS for safety, or like I said, this emergency braking that can do. Okay, I am excited. I do think that these partnerships are going to happen. There's a reason why Ford and GM were forced, like you said, they did not want to do this, but they had to finally come out and admit to the world, both of them on the same weekend, basically saying, we're not going to be able to get profitability until 2030, and then very quickly they both had to partner with Tesla. GM, I'm sure, was reluctant. I think we all agreed that it was more of a shotgun wedding. But then at the CNBC interview, she did say that we're going to save something like $750 million or something like that because we're doing this partnership. So,
Yeah.
uh,
It's their spend would have been about 750, and they're saving 300 or 450
oh, okay.
million, which is a big number. And they're in capital. That's the other message they're sending. Besides, we're not hitting our gross margins, and we're not going to be at price parity with EV until 2030 or beyond. But that we're in quote unquote capital preservation mode. And you saw that with
Yes.
the involuntary or the voluntary reductions and some involuntary reductions, with Ford as well. And they're preparing, for financial distress. So I mean, you can't deny what they're doing. They put up
Yeah.
fairly decent quarters, but they also know it's coming. So this is why I think I would say the next year, 1 to 2 years, are going to be very interested in the auto industry.
Okay. So some more news that came out this weekend was Tesla is rumored to be planning a more than $4.5 billion factory in Spain. This is a rumor. There's no reason for us to really think that this is true. But what happened is the local government confirmed that it's negotiating with an automaker for a potential large investment in the region. They did not confirm which company is behind the project, but the local newspaper reported that it's Tesla. So who knows? It's a rumor. Spain. Um, and then this one I don't think is a rumor, but basically Tesla's asking its Chinese suppliers to build plants in Mexico. In a previous show like this, I don't know if it was you, but I think it was with Brian, where we covered 20 different companies, suppliers that have formed and are investing factories around Giga Mexico, Giga Nuevo Leon. So it's already happening, but I think in this case,
Yeah.
Tesla's asking the Chinese suppliers to do it. They want it to be very similar to how they replicate what's happening in Giga Shanghai. They want its supply chain system there. So you're the expert in supply chain. You've done this at executive level. In fact, you actually do consult with companies today in China with supply chain. So tell us how important this is.
Only US, yeah. Yeah. Yeah, it's very important. I mean, this is what you do when you're building a mega factory is you want to reduce the latency of your supply chain. The latency is time. It's time between decisions. It's time between financial movement. It's time between material movement. So if you can put your supply base physically close to your factory, you get product quicker. You also recover from problems quicker, and there's also less time where there's capital that's on a ship or on a plane. That capital is not doing anything for anyone. So that rate of turn of inventory, it's called a cash conversion cycle, accelerates the closer you bring your suppliers to the core point of system manufacturing and output and distribution. And this is why you want your factory in the continent where you're doing most of your distribution. So because you don't want to put your cars on boats and then extend that cash conversion and inventory cycle further. You want product coming in as quickly as possible. You want it built as quickly as possible. You want it out the door, and you want your customer signing for the product as quickly as possible. And that's what Tesla is building. This is what they're building in Mexico. This is what they're built in Austin. What they're building in Berlin with their latest factories in Shanghai and so forth. They're building this machine that's going to have very, very low latency. So if you're an investor and you're thinking about, again, capital inflows in the Tesla and how they use capital, they're very efficient in their approach. They're very efficient.
Yeah.
So this is a good thing for investors. This is a good thing for Tesla and their financials to ask their suppliers to move and be co-located versus suppliers saying, "Hey, I want to, I'm cheaper in China. But hey, well, look, if you look at this is where companies struggle. If you don't look at the total landed cost, landed means that part arriving in the factory and its packaging. If you don't look at that total landed cost component, you could easily be confused and say, "Wow, I'm cheaper if I build it in China versus Mexico." So this is a great move,
Sure, but
and those are the reasons behind it.
couple nuanced questions for you, Jeff. So one is so excuse me, why did they have to ask? Okay. And secondly, why Chinese suppliers? So, obviously Chinese suppliers supplying to Shanghai. We've got Giga Berlin, we've got Giga Texas. Why, if you're building one in Giga Nuevo Leon, couldn't the same manufacturer suppliers for Giga Texas be the ones to do this? They're closer, they're already there. Why the Chinese suppliers specifically? And then why did they have to ask? Like, I mean, shouldn't have been straightforward. You know what I mean?
Well, first off, this is a mixture. This will be a mixture. It's not going to only be Chinese suppliers. I think again, this is an article. This isn't a press release from Tesla. I think we should always keep that in mind. But what I think Tesla is doing with these new facilities is they're kind of looking for. Remember, they build very similar cars in these facilities. What I think they're doing is they're looking for the best suppliers who have the best overhead cost structure. And if you're based in the U.S., your overhead cost structure is going to be higher than if you're a supplier that's based in China. So obviously, starting with some of the suppliers that are from China and having them co-locate probably makes the most economic sense. But I do believe it's going to be a mixture of suppliers that feed the Austin plant and suppliers that feed the Austin, I should say Austin Fremont plants, and suppliers that feed the China plant. And I believe they're having a bake off. I believe they have suppliers in rooms now competing with each other, not face to face, but they're in separate rooms, basically giving separate bids to Tesla. And I believe Tesla is bidding all this business out. They're in the best position again of any auto manufacturer. Every other one besides BYD is basically flat in volumes to declining, and they're on old technology and old factories. If you're partnering with Tesla, they're building this mega factory. They have all the volume, momentum, and growth behind them. They have suppliers killing themselves for this business. So you're saying like, why are they asked? I don't know how this article. I don't know the kind of the. I think it's an interesting nuance that you bring up, but I believe in my experience that suppliers are throwing themselves basically at Tesla now, and this may be kind of an invite. Maybe they're having a supplier summit in Mexico. You never know. So that could have been an invite, and that may have been how this is construed. But I don't think Tesla has to ask anybody. They're fighting over each other to get this business, in my opinion.
Yeah, I'm sure I'm reading way too much into it, but thank you. I'm glad I got to ask you this question. So the next bit of news for today is NIO, Chinese manufacturer in Shanghai. They announced that they're going to have to cut prices for all NIO models by 30,000 yuan, which is 7 to 1 to US dollars. So about 4,000 US dollars, all prices. And the CEO, William Lee, said they had been constantly deliberating over the price cuts until 3 a.m. Earlier, he said NIO would not cut prices in response to Tesla's price cut. They really did not want to respond. Clearly, their business is now affected. They're debating, should they do it, should they not do it? So they did it. They're cutting prices by $4,200 US dollars for all models, including the ES6 and ES8 SUVs. It's also ending the free battery swapping. So a lot of people are very confused why they even had battery swapping as part of what they're offering. This comes just days after NIO reported a gross margin of 1.5%. Oh my God. And a net loss, 650 million. And so this is the whole point about people are saying, be careful, watch out. The Chinese manufacturers are really the ones to be afraid of. And they definitely have the technology. They seem to be much more EV focused. They've got the market. The market in China is buying these cars, but they can't make a profit. And they now need to cut prices So once they cut prices, Jeff, and they have this margin, I mean, like, I just find it a little funny, not funny, I guess there's a better word for that, that when Tesla cut its prices by 20%, 15%, everybody's freaking out, but their gross margin went down from 20% to 18%, and then they freaked out. Here's a company that is 1.5% gross margin cutting prices by 4 grand. You tell me what's going to happen.
Yeah, yeah, the noise on the Tesla moves. It's like, people drowning in a puddle versus this Neo's being thrown into the bottom of the ocean with cement weights around their ankles. It's a big difference. Here's the thing, and the Chinese competition, the
Mhm.
company that is I think is most vertically integrated is the one that's going to kind of rise from the ashes. And there may be, one other one. There may be new ones that appear over the next couple of years. But BYD is vertically integrated. They have a components business. They have their own battery business. They do battery design. They do battery manufacturing. They do integration, obviously, into their electric vehicles. That vertical integration is going to give them an edge over the Neos, the Xpungs, and so forth. So I believe they'll rise out of China. They'll be a formidable competitor and a top player in EV. And there may be some others that are that there's a lot of players right now in China. That's what's happening right now. There's a lot of people that just go to cattle, they buy batteries, they do a design, and they see if they get something that sticks with consumers. But what's happening is though kind of the experience is being watered down. First off, the unit economics don't work with auto unless you're that vertically integrated or you have massive scale, and they don't have it. And the other thing, I think the user experience kind of gets watered down. You want to get to kind of again, a core like global user experience when you use the device, like an iPhone, for example. And I believe that's where Tesla is going to get to. I think BYD is going to struggle with that globally. To be honest with you, I don't think that's going to resonate as well with consumers as they try to localize their software in other regions. I think they'll struggle with that. But yeah, these competitors that are basically in low to single digit gross margins, they're basically forced into this because if they don't make this move, they're going to be sitting on all that inventory, and then just they'll be crushed not only from the inventory, but what do we talk about with Tesla? Tesla had to keep their factories running at the greater than 80% utilization. So if Neo doesn't do this, they get crushed under inventory and they have to just basically shut their factories down, and then their fixed costs would just cave in on top of them. So this could be the final throws. We'll see.
Okay. I mean, these price cuts that happened in January, now it's June. We're still seeing the implications of that. And we're probably going to see continued implication from all these different OEMs and how they're reacting to this. Okay, so last chart I want to show, because you, again, this is a topic that's near and dear to your heart. You've been telling us all about the IRA, that it's being underestimated and under kind of people haven't really digested what it means. And I've shown this table before, but basically this is saying that it's estimated that Tesla could receive $41 billion in IRA credits by the end of 2032. Tesla's in the black from 2023 to 2032. Then you can see the estimates for what GM might get and what Ford might get. GM's in the green, Ford's in the gray. And it's primarily going to be Tesla that gets the vast majority of all this, certainly at the very beginning. So if this is before Ford and GM forecast delayed to 2030 in terms of what they think is profitability, and if they're not going to be able to get profitable, then it's going to be less likely they're actually going to produce the new cars they've been saying and promoting as fast as they can. If they can't get profitability, they're going to slow all that down. So the vast majority of this could actually keep being sent to Tesla. What do you read on this?
Yeah, first off, I think this is undercall. I mean, this looks like an auto view, and Tesla has this whole energy business where they're going to be using
Right.
batteries built in the US and putting them in the storage and getting credit. There's credits for both the consumer side, and then there's credits for the manufacturer side in stationary storage, and of course what we're talking about here in auto. So I think that black line is actually going to be for Tesla is going to be much more to the right, and starting really in 2024. And he's been on the record in a prior earnings call saying it's pedal to the metal. First off, he was against the IRA. He's like, look, we can compete without this. We don't need this. This is kind of like a handout. and the government has all this debt and deficit. But once they said, like, look, we're doing this. This is law. It's passed. He told his teams, all right, pedal to the metal. Let's go. They took a bunch of battery capacity that was destined for Berlin. They sent it back to the U.S. and they're racing to increase capacity in the U.S. So I think this number is going to be a lot bigger on the Tesla side. GM and Ford already capitulated on charging. So Tesla is going to be doing more and more of that business and getting credits there. So I think that's just an auto units view. You have charging, you have battery storage, and you have all those other businesses that Tesla is doing. So I think they're set up really well for this.
And refinery mining too. Yeah.
Mm-hmm.
Okay. So we've just gone through an hour's worth of incredible information. Thank you for sharing the information about what to expect with the stock. It's risen quite a bit from the last 11 days. We'll see what happens today. I think it's already a record, right? But today will be the record for Tesla to have consecutive days. What is your just general, not financial advice, but if as a friend, what are you thinking? What's your guess of what might happen in the next month or 6
Yeah, I
months?
certainly wouldn't be betting against Tesla here. You're right in between. Again, the market's looking past the first half, looking ahead to the second half, and more looking ahead to 2024. You have analysts tripping over themselves to increase their price targets on Tesla, and then you've got these product moments that are going to occur with the Model 3 Highland, which again was prior to Model Y the highest selling car, and then the Cybertruck. So I would not be betting against Tesla at this point, and certainly, I would be, again, not investment advice, but I would just kind of be strong with your commitment and just do your own research and see, do you see these product announcements happening? Do you see the volumes growing? But again, there's obviously going to be pullbacks along the way. You've got this macro occurring, and you have this continued concern with macro and a consumer slowdown occurring. And then just technically stocks get tired and have to pull back and then kind of like gather steam and then go up to the next level. But
Yeah.
Tesla's really bursted through a number of technical levels here. So I think the next couple of weeks are going to be very interesting. And again, I wouldn't be betting against Tesla
Yeah.
with all of this on the horizon.
And we should remind people that the sentiment can change very quickly. Just a month ago, after the Q1 earnings call, everybody was so negative, thinking that we're not going to see, because the earnings is so low now, we're not going to see this, compressed earnings for the next year or two because of the price cuts. Woe is me, the price it's over. Tesla's, let's leave Tesla. Well, in a month, the sentiment has changed.
I was
So
always saying
hopefully,
3 to 6 months, much quicker. I was always much
and
quicker on that. I was not saying, yeah,
and
sit
I
out
was
of
the one
Tesla for
saying,
2 years.
don't listen to any of this. But
Well,
yes,
we'll
anyway,
see.
I just, I,
We could be a
I
month
just
from
think
now and be
that
totally wrong too, so we'll see.
right. That's why that was my point. My point is the sentiment can
Yeah,
change either way at any moment. So yes, don't count your chickens, all that stuff. Thank you so much, Jeff. Perfect. Thank
thank
you
you,
for
Robert.
warning us. You saying that this week is very critical as something I did not know. So thank you for letting me be aware of that. Thank you guys very much. Thanks, Jeff.
Thanks,
Follow
Robert. Thanks,
Jeff
everyone.
on Twitter at the Jeff Lutz. Please follow him, man. The guy's amazing. Okay, see you guys.